India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, middle of the week. We're coming to you as always from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, morning, folks.
Morning.
Good to have both of you back, and we're waking up to some good news. The best among them that at least in the Middle East, there's a ceasefire. It's not entirely over. We still have issues raging in Gaza and Ukraine, but at least between Lebanon and Israel, there's a ceasefire. Fantastic news, I'd say, to start the day at least.
Well, that's right, and good for humanity, above all. Though we track the financial markets, but good for humanity, so hopefully better sense prevails.
And now for the second one, which is Russia-Ukraine. And I hope that gets done as well as we sort of see Trump coming into the White House early January. He's promised. So we'll see. But let's just rewind the clock back and tell you, beginning, what you need to know from the U.S. market session. So U.S. equities hit another all-time high. And for the S&P 500, it is the 52nd record of the year. I mean, you just need to sit back and look at what the US has done this year. It's just incredible. I think the S&P is up some 26% in 2024. It's really in the top 5 percentile of performance. I mean, if you can go back the last 100 years. And what is even more remarkable, of course, is that, the rally, the 26% has come in for a majority, 50-60% of the 26% has come in from about 7-8 names. So it's just been a remarkable year, really. Those are the changes last night. S&P, NASDAQ, Russell, though, was a little lower. The 10-year yield, 3 basis points higher. We left off at about 4.3%. You had FOMC minutes, which showed that people were a little more at least in terms of commentary in that meeting, saying, well, rate cuts perhaps need to be a little more gradual. So in that sense, incrementally hawkish as compared to the previous FOMC meeting. Dollar went up a little bit, but marginally so, 106.87 on dollar. Oil prices, again, flattish, but we'll see if there is a bit of a move coming in this morning. So U.S. President Biden announced that Israel and Hezbollah have reached a ceasefire agreement. I mean, it's a temporary one, I think 60 days, and then we'll see what will happen. But remember, all of this, of course, is happening as, this current administration is under Biden is on its way out, and Trump and his team are ready to come in. And of course, I mean, if there's one thing which elect Trump has been very clear about, is that he wants to end conflict. So we'll see if that is indeed the case. But for now, it's good news. Now, coming to India, FIIs bought in the cash market yesterday. Remember, there were buyers day before yesterday as well, but there was that large MSCI flow. And the actual, net of the MSCI flow, the actual net cash number was hugely negative. But yesterday, there were buyers. And so if you count that as the first in the last 2 months, it's quite something. So the selling intensity had come off, and now at the margin, are they starting to buy? But it's just one day in that sense, so we'll have to watch this closely. So the levels don't change very much on the way down. The support for the Nifty comes in at between 23,956 and the 24,000 level. These are the two numbers. Decisive close on the Nifty above the swing high that we saw recently, which is 24,351, is going to give us an indication that maybe, the market can build in more gains here. And on the Nifty Bank, immediate resistance is 52,680. That is the 61.8% retracement of the full decline that we had. And you're not very far away from that level, about 1.5% from yesterday's close. On the way down, support comes in at the hourly average, which is 51,455 on the Bank Nifty as well. The Gift Nifty will come up on your screen, gives you a quick sense of how we're likely to start, about 40-odd points higher. Surabhi.
Absolutely. I think the cues are quite positive. By the way, I was looking at Trump's latest appointment, a gentleman called Kevin Hassett, and he's going to be leading the National Economic Advisory Council that they have. Whatever little I could read on the gentleman he seems like a bit of a hawk. He was part of the previous administration as well. He's been supporting punitive tariffs in the past, corporate tax cuts in the past, and sanctions on anyone who's buying Iranian oil. That's past track record. Let's see. But anyway, that aside, I'd say we're waking up to three great pieces of news this morning. So first, let me put the three on the table. Number one, the ceasefire that we spoke of. Number two, the fact that markets are kind of taking a lot of this rhetoric on trade tariffs in their stride, perhaps waiting for the real bite to come in. Right now, it's a lot of talk, so we'll see what happens after the 20th of January. That's the kind of mood in the market. The third piece of good news that we have here locally is that FIIs have begun to buy. Is the selling finally coming over, coming to an end? That's a big question. So 3 good pieces of news. Let's just go through them one by one quickly. First of all, global markets mixed, yes, but some of them are still trading with a shade of green. There's no major sell-off or anything like that. There are rate cuts in the region. By the way, New Zealand has surprisingly cut rates by about 50 basis points. They were really high. Even after this 50 basis points cut, they're at about 4.25. So that's what's going on. There was inflation data in Australia, which is actually quite fine. Inflation numbers about 2% thereabouts, a little lower than expected. Then on this ceasefire, yesterday, the U.S. President, Joe Biden, he called it, an agreement that is designed to be a permanent cessation of hostilities. And that's something that people will really want to hold on to in financial markets and otherwise, that this is going to be permanent and this doesn't lead to more skirmishes suddenly. Finally, coming to the other bit, the FPI selling, the good local news here. The market's been rebounding, remember, 1,000 points over Friday and Monday. Yesterday was a pause day. But look at this. And, yesterday we were saying that take the FII number with a pinch of salt, that 9,000 crores of buying that happened because of the MSCI rebalance. But again, even in yesterday's trading action, you've got a small incremental positive figure, the first in many, many, many weeks. But it was, I think, 42 days of selling. Then we had the 9,000 crores of buying on Monday. And this is a follow-up to that. Domestic institutions were on the sell side, actually, for a change yesterday. Lots of interesting corporate news to track today. Number one, watch out for Siemens. Could be really good because the numbers that came out, the quarterly report, looks absolutely great. You can argue that the top-line growth at about 11% is a little lower than estimates, but operationally the performance is rock solid and strong. EBITDA is higher. Profits have jumped over 40%. And there's major margin expansion. The margin expansion that Siemens has posted is better than estimates. So I'm going to watch out for this one. And in the same league of the CapEx and power story, NTPC Green is listing today. It's a large IPO, 10,000 crores. Now, everyone is, aware of this. It's not likely to be a very big listing pop. 2-3% is the kind of, premium that was doing the rounds in the so-called grey market. So the issue price is 108, maybe get 3-4 rupees higher at the start. But perhaps this is going to be one of those longer-term stories that you need to see how it plays out. And finally, last but not the least, I'll watch out for Mahindra & Mahindra. Those high-profile EVs were unveiled yesterday. The stock has been on a roll, and some of the brokerages that have been writing about it, Nuvama, for instance, was reading their note in the morning, quite optimistic on the stock and on the prospects of these models because they're packed with features, which is the Mahindra way, and they've been offered at a fairly competitive price. More on this as we go ahead. But yeah, those are some visuals that came in from last evening. Looking good, feeling positive, Nigel.
Well, that's right. And let's take the top cues then coming in from overnight itself. The dollar index that was strengthened a little bit. It went up to approximately, by around 0.2% or thereabouts. The yields, though, the 10-year yields, well, that is more or less well-behaved or, around that range of around 4.3% or thereabouts. And the good news overnight is obviously that ceasefire that we heard about, which has caused crude oil prices to stay subdued below that $73 per barrel mark. What about the positioning yesterday? What are the FIs did? Yes, they seem to be turning around in the cash market because that selling that we saw, at least that is subdued. It's turned into buy numbers. I'll tell you what, if it's more or less flattish as well, we'll take it. The longs, yesterday they were unwound by close to 8,500 contracts after the big short covering we have seen in the previous 2 trading sessions. And they added some mild shorts. So the short positioning continues at around 65%. And going by the long unwinding and the short addition, if you pull up a chart, you'll see from around 109 lakh contracts on the short side, it's gone up a little bit to around 1.2 lakh contracts. You want the FIs to be net short on the market. And if they're not going to sell in cash, well, that's going to be good news as well. Moving on. What about the F&O data? Well, how is the options data stacking up? 24,500, 24,400 call, both of them fairly active in trade, which gives you a broad range, right? On the downside, you're looking at the 24,000 mark. This is just for the day. And on the upside, around 24,400. And I say this because the last couple of trading sessions, we've gone to around 24,350 and we've faced some resistance out there. That's the high for the previous 2 trading sessions at around 24,350. So I think around the 24,400 mark, that seems to be a bit of a resistance zone. On the downside, 20 DMA, that's a reference point. So around 24,000, 23,950 odd, that should be a reference point just in the near term on the downside. The Nifty Bank, Well, that's been moving very, very well. Last few trading sessions, it's had a good run. Now you have both those two reference points that comes up for you on the screen. That's the 50 as well as the 100 DMA, which is close to around 400 points, 400 to 500 points away from current levels. So we'll keep an eye out on that. The GIFT Nifty was suggesting a more or less flattish to a positive start, I think, the last time I checked. So the hope is that we get back to the previous day's high, that is at around 24,350, and then build on from there. So let's see how that goes.
Okay, well, Nigel, thank you very much for that. So that's the setup as we begin this morning in terms of the session. Let's quickly run you through the corporate interactions, which you will hear from, and some of them are at the bottom of the screen in terms of teas. So you'll hear from the Zaggle management. They've tied up with MasterCard, and we'll tell you all about it. Stocks, of course, done very well. 9 o'clock in the morning, we have Harshit Kapadia, Vilara Capital, and we talk about the CAPEX and that space, entire space in the market. 9:20, Sanjeev Prasad of Kotak Institutional Equities is the market master of the day. 9:30, Hitachi Energy India will talk to us about the latest order from Power Grid. Vimal Kejriwal of KEC at 9:40 on order wins. 9:50, we'll have the Indian Banks Association representative join us to discuss RBI's ECL framework and the health of the financial sector. It's the economy at 10:15 with Lata, and she'll be speaking with Upasana Chachra of Morgan Stanley. Stay tuned.
Welcome back. Here with us on Bazaar Morning Call. Now, Qs are quite okay, though markets across Asia are mixed, you'd have to say. The implied open looks like the bulls will be in control once again. Lots and lots of stocks to track, including one big listing today. So let's straight away go to the team for the CNBC-TV18 list of top stocks to watch. And what else but M&M. So Darshan, we were just looking at the footage when I was mentioning it in the opening commentary as well. So tell us what's the verdict? Bit early, but what are the first feelers?
First, it has launched much anticipated two electric vehicles, and those names are BE6E and XEV9E. And when prices are looking attractive, for BE6E prices rupees 20.3 lakhs, and for XEV9E prices rupees 23.5 lakhs. And these prices are on road price, and sales for the same are likely to begin in January 2025 and deliveries by February. What do brokerages say? Most of the brokerages are largely positive on these EV launches. MS says models are high on performance and are feature rich. Prices are in line with premium variants of best-selling ICE models, that is petrol and diesel models, but offtake will be key to watch. Even Goldman Sachs says these two models will help company address segments totaling 85,000 units per month. Elara says company has done all that it takes from their side. It's for the category growth to pick up in India, and company has earmarked a capacity of 10,000 vehicles per month of EVs in FY26, which are higher than the size of the entire Indian EV industry currently. So overall, brokerages are too positive on these two EV launches. So after yesterday's downfall in the stock price, we might see some green in today's trade.
Oh, yeah, absolutely. I mean, M&M has come to define this category, the SUV category. And let's see if they can do the same with the EVs as well.
Well, that's right. We'll keep an eye out on that one. Pretty interesting looking vehicle out there. It's quite sleek, actually. But so we'll talk about that and more. But let's go back to Vivek. He's here to tell us about Siemens. Vivek?
Well, good morning. Very good set of numbers from Siemens this time around. Operational efficiency coming in, kicking this time around. Remember, they follow the September year end, so this was the last quarter for them as far as FY24 was concerned, or SY24 as they call it. So revenues slightly below the CNBC-TV18 poll. However, EBITDA as well as margins much above what was anticipated. PAT to above, but PAT was also aided by higher other income component this time around. So revenues on a year-on-year basis up 11%, EBITDA up 34% on a year-on-year basis. EBITDA margins expanding almost 250 basis points, and profitability higher by 45%. So what did well for the company this time around segmentally? So when you're talking about energy as well as mobility, that was better than what the street was anticipating. Smart infra and digital industries slightly below what the poll was anticipating. New orders, the core orders that we're talking about is up 37%, coming in at a little over 6,100 crore. But on a year-on-year basis, remember, there was one large HP locomotive order which has been taken out. So when you're talking about what the company has mentioned, number one, they've gone ahead and committed to additional capex of close to 100 crore for the power transformer factory at Kalwa. They want to expand the range of products over there. And in the management commentary, while they've largely guided for strong demand as well as operational efficiencies, an important trigger is that the company is saying currently focused on completing the announced demerger of the energy business, expecting a green at least for the start as far as Siemens is concerned.
All right, Vivek, thank you very much for that. So that's Siemens for you. Lots of interest around that name. Well, let's focus on more from the auto space. Ola Electric and Lumax Auto should be in focus. Sudarshan is here to tell us why. So good morning again.
Morning, Prashant. So after M&M launch, it's Ola has also launched a range of electric scooters and also power pod. And this range of scooters is in addition of current range of scooters that company provides. So it has launched Gig and S1Z in price range of 40,000 to rupees 65,000. And company has opened reservations at rupees 499. And it was reservation started yesterday, and deliveries are expected to begin in the month of April 2025. Talking about targeted consumers for Gig and Gig Plus, company is targeting gig workers, and for S1Z and S1Z Plus, it's for both personal use as well as light commercial use. Talking about the power pod, it's a power source and priced at rupees 10,000. Company says it will allow Ola's portable battery to double up as an inverter, and it can power small household appliances, lights, fans and other essential devices. So I'm going with green for Ola because prices that they have mentioned for this range of scooters is much below that they currently have for the current range of scooters. Next is Lumax Auto. Company has completed acquisition of 60% stake in Green Fuel Energy's alternative fuels business, and acquisition is done for rupees 153 crore, and it will be done via debt and internal accruals.
Okay, all right, got that. Sudarshan, thanks very much for that. With that, let's move on. Abhishek is looking at Zaggle and Fusion Finance as well. Abhishek, morning. Tell us why.
Morning. So to begin with, Zaggle has entered into an agreement with MasterCard Technology Private Limited. This is a referral partnership agreement that they have entered into. MasterCard will recommend Zaggle's SaaS platform payment as well as card products to their corporate customers as well as other ecosystem entities on a referral basis. So the term of their partnership shall begin from 26 November 24 for a period of 7 years. So this is a good partnership coming in for Zaggle. With reference to Fusion Finance, this is the first indication from a rating agency on the stress that is being played out in the MFI or the microfinance sector. So CARE has placed the long-term ratings under negative watch for Fusion Microfinance, and this rating has been reaffirmed at CARE A. So microfinance industry is experiencing a significant rise in delinquencies or asset quality woes, and the JLG model or the joint liability group model as well as that is weakening, as well as the fact that decreased center attendance as well as high attrition. Now I understand from my sources that attrition is as high as 60% with reference to the junior category of employees who are on the field for collection efficiency. So that is impacting the collection efficiency in the sector. Fusion's deterioration in asset quality is higher than peers over the last 6 months or last 2 quarters. So CARE rating anticipates additional credit cost of about 500 to 700 crore for H2 FY25 for Fusion Finance versus 1,000 odd crores that they had in H1 FY25. So company is also planning to raise an right issue of about 550 crore by the end of FY25. Back to you.
All right, Abhishek, thank you very much. By the way, you'll hear from the management of Zaggle. Avinash Godkhindi is going to be with us to talk to us about that agreement with MasterCard, which they've entered into. Well, let's talk about more names. Wipro, RailTel, Aster, DM. What's the news? Rima is here to tell us. Rima, morning.
Hi. So for Wipro, it's an extension of a contract that they've got from Marelli. Marelli is an automotive company headquartered in Italy. The deal is, it's a cloud transformation, basically migrate their data centers to the cloud. The company has not given us the size of the deal, but there are some reports which suggest that it could be a $100 million contract. But remember, this is a renewal of a 4-year contract. It was first initiated in 2020. It came to an end, and now it's been extended further. Size is not known, though. RailTel has won an order worth about 15 crore rupees, so that's a positive. And for Aster DM, there are 2 sets of news. The big one is the board meeting on the 29th of November, where they will consider issuance of preferential shares of up to 5% equity. The company on the 29th will also hold an investor call at 5 p.m. Separately, the company said that they will be acquiring the remaining 13% stake in Kolhapur's Aster Aadhar Hospital. And after they acquire this balanced 13% stake, they will own 100% in this entity.
Okay, all right, Rima, got that. Thanks very much. So all those stocks on our radar as well. As will be ZF Commercial. Something seems to be brewing here. Let's ask Nimesh what's happening. Nimesh, morning. What are you picking up?
Hi, morning, sir. So there is going to be a large block in ZF Commercial. The parent Wapco is looking to sell 3.5% stake in the company via block deal. The floor price indicated is 12,400, a potential 14% discount from yesterday's closing price. So need to see as to which price at which the deal gets done. So the parent owns close to 67.5%. After the 3.5% stake, they'll be left with 64%. They've sold in last couple of quarters as well, under 3.5% stake. The deal size is close to $100 million. So size is not big, but the fact that the parent is selling another 3.5% and the indicated floor price is to a 14% discount.
Okay, got it. Nimesh, we'll keep it on the radar. Thanks very much for that. So let's quickly recap our list of stocks to watch this morning. The ones that have positive news flow are M&M, Siemens, Ola Electric, Lumax Auto, Zaggle Prepaid, Wipro, Railtel and Aster DM. Stocks with negative news flow, Fusion Microfinance and ZF Commercial. Okay, so that's the stock list. Now let's talk commodities. We've got Manisha Gupta joining in. Manisha, morning. Finally, some good news coming in on that ceasefire, right? So I guess a little bit of the geopolitical risk premium coming off. What's the latest?
Oh, absolutely, yes. With the Israel-Hezbollah ceasefire accord beginning today, we have seen the crude oil prices continue to decline further down there. So 70 and below is where we are looking at. The WTI price is trading at 68.5 is where it is, and we're holding at 72 for the Brent prices. Apart from that, the OPEC may also further delay its planned output hike from the 1st of January. That's another thing that's weighing onto the market. It is a similar scenario when you look at various other commodities as well. It also has to do with the tariffs that have been announced by US as well. So that seems to be weighing onto metals as well. Gold and silver prices, after that very strong gain in the previous week, the last couple of days in this week have been slightly on the weaker side. So gold and silver trading in the negative yet again. Copper prices slipped after that 10% tariff announced on China. But remember, China peak demand season is November and December, and that in some sense seems to be supporting prices. Zinc has been an outperformer, 2% of gains onto this overnight. Sharp decline in LME inventories is what really seems to be supporting the zinc prices as of now.
Manisha, Bitcoin has come off, right? Back to about $92,000. It was almost at that 100,000. It slipped.
It did, yes. 99,640 is the all-time high, and it was just $300-400 away from that 100,000 mark. Didn't do that, and the strength in US dollar, the kind of sell-off that we saw in various other asset classes, absolutely has weighed on cryptos.
All right, we'll more on that later. Manisha, thank you very much as always for joining us and running us through what's top of mind for commodities. Devane is going to be with us on the other side with some fundamental stock checks. Stay tuned, coming up.
Well, NTPC's renewable arm, that's NTPC Green, will make its debut on the exchanges today. Vivek joins us to help us out with a quick analysis of that. Vivek, take it away.
Well, good morning. This is a large one-of-a-kind listing that we are going to be seeing as far as the Indian bourses are concerned. This is going to be India's first pure-play renewable energy listing that we will be seeing. So remember, just quickly going through, what the company was looking to raise, 10,000 crore, fresh issue, a price band of 102 to 108, most likely going to be listing at 108 given the fact that the issue was fully subscribed to 2.4 times. What is the company using the proceeds of the IPO for? Largely for debt reduction for its subsidiary. 7,500 crore will be going towards that. Now, talking about the calculated implied valuations, and this is where the important part is, post-issue market cap of this particular company will be very large at 91,000 crore at the upper end of the price band. So, according to analysts, when you're looking at the FY27 estimated EV to EBITDA, it is almost trading at 16 times and 13 times FY28 EV to EBITDA. Significant, it's trading largely in line with US peers, but at a steep premium to the European peers. SBI Securities estimates that, with this particular valuation, the stock at 108 rupees a share, is actually trading at an EV to EBITDA of over 50 times FY24 earnings. Now, when you're talking about the installed capacity, remember, this company is still a nascent company. Operations have just about begun, and installed capacity is 3.3 gigawatt. And the company, however, has very large plans, and the carving out from NTPC is mainly to go ahead and accelerate the growth plans of the renewable energy arm that is going to be listed today. Under construction, close to 5.9 gigawatt, and that is the near term. What is it that the company has in terms of ambitions? FY26 renewable energy capacity plan of close to 11 gigawatt. FY32 plans to commission close to 40 gigawatt, and by FY32, the company plans to commission close to 60 gigawatt of renewable energy capacity. That is a significant target that the company has planned. Now, remember, there are quite a few questions to be asked. Number one, mainly is execution. There have been significant execution delays that the company has. And another important point is, number one, will the company continue to enjoy finance costs at the same rate as its parent NTPC, and will NTPC support continue? That is going to be an important question to ask out for. Remember, the other stock that will remain in focus is the parent company itself, which is NTPC. Jefferies estimates a 67 rupees per share as to value that they are giving as far as this particular listing is concerned to NTPC. This is after a 20% implied discount, and they're taking into account the price at the upper end of the price band at 108 rupees a share. So important to watch, number one, how the listing does and the rub-off effect it has on the parent company, that is NTPC.
So basically, in the next 5 to 6 years, Vivek, they have to go from 3.8 gigawatts of installed capacity, you said, going all the way up to 40 gigawatts, is it?
That's right. And by FY32, 60 gigawatt is the target. Yeah.
60 gigawatts by FY32. But I don't know, I mean, there's no immediate listed comparable peer, right? Because Suzlon is only wind, then there is Wari, which is solar. Should we compare it with anyone in the listed space at all?
No pure play direct comparison. Renew Energy, listed in the US, but does have operations in India.
Got it. All right, Vivek, thanks very much. So this is going to be a good learning lesson for investors as well, as we see how NTPC Green is going to start off its listed journey. Thanks very much for that. We've got Deven Choksi joining in from DR Choksi FinServ. Deven, good morning. Thanks so much for being here. Let's start right there, right? It's a very hot space. The whole renewable energy space. We just had that COP21 international global deal as well earlier in the week. What's your sense? I don't know, whether your teams had coverage on the IPO at all, or maybe you'll wait for it to list and then make up your mind. But the thing is, it's PSU, so we don't know if it's going to be slow moving, whether it'll have aggression or not, though it's in the right space.
Yeah, certainly. Good morning. Yes, we did cover this particular IPO, and we believe that I think it is largely the IPO for the investors who are holding the investments for at least, I think, 5 years and above. Largely because of the fact that in the current capacity that they have, sub 4 gigawatt, I think they are basically expanding this particular capacity in next 8 years by about 15 times. So certainly, I think this is going to be a game where probably you are going to see the larger part of the revenue and the profits increasing year over year on a systematic basis over the next 6 to 8 years. So from that perspective, investment looks absolutely favorable and to be considered in the portfolio. However, most of the retail investors or the people who are basically flipping the IPOs, they may not be very excited about this particular story, largely because of the fact that I think the eventual growth is coming up over a period of time, being an infrastructure company. And that's why probably I think many of these short-term minded investors, I think, will not probably be interested. But yes, it is a good opportunity for the long-term orientation, and I think invest in the portfolio from that perspective.
Deven, it's also the age of instant gratification, right? You want to make 50% money on day one of listing. So I think this is not for those category of investors. This is for the patient ones who can really study these businesses in detail, folks.
Yes.
Talking about instant gratification, today I think the Times of India is carrying a story. And I think this is for those who are watching, especially those who are, not that tech savvy, etc. An elderly gentleman in the south of Bombay has lost 11 crore rupees in an online stock kind of a fraud.
Oh gosh.
So I think it needs to be highlighted again and again. We will do it here on CNBC-TV18 with, of course, markets exploding and, communication channels exploding, etc. exactly that. I mean, all of these schemes, of course, tap into that same thing, which is, get rich quick schemes, make quickly money, double your money, and those kind of things. And we are hearing so many, 11 crores. I mean, an elderly gentleman here in Mumbai, it's the second largest fraud which has happened. We'll need to, I think, constantly be on the guard, especially with regards to some of this stuff out there. Nigel.
Well, indeed. And if anything is sounding too easy to be through and too, good to be through, please be very, very careful. Don't fall into those traps. We try to do our best in terms of, alerting you to be careful and, please be doubly careful about this. Well, Devin, good morning and good to see you in. We had Siemens that came out with a set of numbers. On the profitability aspect, actually, it was better than what the street was working with. Your view on Siemens?
Yeah, Nigel, I think absolutely. In each of the four verticals, I think the company has basically shown the higher amount of growth in the margins, the profit margins. So that is definitely, I think, sounding positive. Maybe it is largely to do with the corrective strategy that they have done in form of, I think, the product rationalizations and premiumization. And at the same time, I think the taking the benefit of the higher amount of order inflow at a premium prices. So definitely, I think this has worked well. Maybe if we exclude one of kind of other income which they have earned out of the sale of property, still, I think the operating side, the margins remain absolutely very convincing from mobility segment, from digital segment, from utility segment and infrastructure segment. Each of these segments, I think, have generated reasonably high amount of margin. So that particular thing gives you confidence that the capital goods manufacturer companies are likely to have relatively stronger period. Even the order inflow that one has seen from the published numbers, I think it suggests that at least the visibility of next 2 to 3 years is definitely seen as far as the growth is concerned. So certainly, any correction in the stock price, it becomes a buy opportunity to buy into the likes of Siemens, CBB, among others.
No, absolutely. Got that, Devin. Stay with us. You may want to listen to this next conversation as well. We're talking about Zaggle Prepaid. Zaggle Prepaid, by the way, is a listed entity, is also now just over a year old, a year and a month and a half or so. And what a performance it has had. Closed 2023 at about 220. It's basically doubled in the last 1 year or so. Lots of new partnerships, tie-ups. Every time we speak to them after the, at the end of the quarter or in the middle of the quarter, there's always something new. And they've been expanding rapidly as well. So the latest is they've signed up with MasterCard. It's a referral program, and the agreement is for 7 years. Let's talk about this in terms of what this does to business and growth prospects. Avinash Godkhindi is Managing Director and CEO at Zaggle Prepaid Ocean Services. Avinash, good morning. Great to have you with us here. Thank you for your time on CNBC-TV18. Prashant this side. So tell us, what does this mean? How does this work, first of all? Because it's a referral. So they will, and this is MasterCard India, right, for the India clients. They will refer their clients to you.
So thank you for having me on the show, Prashant and CNBC. The whole thesis is very simple. When we IPO'd, we were a products company trying to create a robust platform. Today, we are a platform company with multiple products, and the market recognizes it, whether it's MasterCard, whether it's Strada, which used to be earlier Ally, Aeon, Hebit. It's gone through multiple avatars. And this is a partnership with MasterCard India, but the partnership is for our software products and our payment products to be taken to corporate customers and other ecosystem entities that MasterCard works with, potentially like banks and other fintech players, both in India and across the world.
So what will they do? They'll go to their clients, and it's like a cross-sell. I mean, they will offer your payment solutions to their clients.
Let me give you an example, Prashant. There are a lot of large companies. Of course, banks and fintechs you'll understand, so I'm not going to explain that to your listeners. That's obvious. But a lot of corporate customers also reach out to MasterCard looking for specific solutions, whether it's on expense management, whether it's on rewards, whether it's on vendor payouts. And when MasterCard gets these requirements, they want to work with a trusted, stable partner who has a high-quality platform, right? So they've done a fair degree of diligence on our software, on our capabilities. And we recently have had quite a few conversations where MasterCard has introduced us, and the corporates have really liked what we are offering them, right? And so MasterCard felt it was right for them to partner with us because they keep getting these requirements from corporates and other players requiring for the software, and now they've chosen Zaggle as a partner to be able to provide those softwares.
Any numbers you can share with us? How many clients? I mean, what's the upside because of this?
Too early, Prashant. But the reach of MasterCard. These companies are like global behemoths, and they attract demand from all sorts of players in the ecosystem, right? And it's a 7-year contract, so it's clearly a testament for the fact that both sides are committed to making this a success.
And for every client they refer, you pay something to MasterCard. And what would that be?
So yeah, those are modalities which are in the contract, which I can't reveal. Some of it is also to do with so when we launched a co-branded corporate credit card with Yes Bank, it was on the MasterCard platform, right? So all customers that come in as a referral from MasterCard, we are expected to provide a MasterCard payment instrument to them.
Hi, good morning, Avinash. Good to have you on the show. Thanks for joining in. I was just looking at the QIP that you were looking to raise. I think that sort of happened. That intent was made very clear end of October. Can you just tell us what's the thought process? 950 crores, I think, is the sum at play. Why do you need to raise this capital? What will it be used for?
Yes, good morning, Subi. So basically, this is an enabling provision. The board has approved 950 crores of fundraise, which is a combination of debt and equity. The shareholder decision is awaited, which should come in by 2nd or 3rd of December. The whole idea is to be able to raise, potentially have an enabling provision to be able to raise a combination of debt and equity up to 950 crores. To grow both domestically and internationally, organically and inorganically.
No, so 950 crores is a mix of debt and equity. We thought the entire amount is going to be an equity issuance. Can you tell us how much would be equity roughly? I mean, what would the split be? And a little more detail on the inorganic growth prospects that you're looking at.
And the timing as well, Avinash, just to wind it down.
Tough for me to speak too much because we still need to get the shareholder approval. Right now, the provision allows us for both debt and equity. It could be completely equity. It could be part equity and debt. It could be, completely debt. So the provision allows us for all three combinations. We are looking at a few opportunities for inorganic growth very intently, and these are conversations which are in progress.
In what spaces, Avinash? I know you can't give us, too much, but at least in what spaces? What are the gaps you're looking to fill?
This is in and around spend management as a space, right? So we are a B2B2C SaaS fintech company. We digitize spends. We have opportunities, wide opportunities coming in across multiple spaces like payments, spaces like, some of them are, loyalty platforms, and some of them are, tech-led platforms for potentially supply chain financing, etc.
Could you buy an NBFC, Avinash?
We are looking at, Prashant, we are looking at high quality companies who have a high quality product, tech-led product, and who have, value to add to our ecosystem customers, right? Today we sit with 3,200 plus corporates.
So that's a yes?
No, I'm not saying yes or no. I'm saying both options are open. We are not averse to a company which has an NBFC license. We're not looking at a traditional NBFC at all. We're looking for companies which are tech-led, which have some significant capability. I mentioned 3,200 corporates, but we have thousands and thousands and thousands of SMEs who are either channel partners of these companies or who are vendors, right?
But there's been no, since, this was mentioned during the conference call after the results, and there were a couple of questions by analysts, because that'll be a new thing, NBFC, with a company, not a traditional one, but still, an NBFC is an NBFC, they may be digital or otherwise. Has there been any investor pushback, or it's very much on the table?
No, Prashant, I think too early for us to comment on this. All options are open. Investors understand what we are doing. look, when we started off on our IPO journey, we spoke of corporate credit cards, commercial cards becoming a big play for us through Zoyer and, our Save platform, right? There was natural skepticism because people said, hey, yeah, you're a prepaid card company, is how they said, with a software platform and, software products. And this is a different space. And look, today, such a significant portion of our profits, growth, our revenues come from Zoyer. We are one of the largest players in the corporate credit card, commercial card space, basis spends, which is the right metric to look at that space. And that's all happened in the last year or so, right? Year and a half or so. So the market's confidence that we see from our investors is very high, that we'll continue to stay very disciplined, very focused, execute. And that's the key, and as long as we are frugal, nimble, and humble, I keep saying this, we will do justice to our investors, and that's the key here.
All right, and you're teasing us today on the show. You're not giving us too many details, but giving us a sneak peek into a lot. Let's wind this down. Since you spoke about Zoyer, current revenue contribution, what is it? I've seen that it's been increasing, and I think you want to take it to 40-50% in the next couple of years. So what is it currently? How do you see it shape up? And in the near term, before we wind up the interview, what's the revenue growth targets as well as margin profitability just for this year, FY25?
So I'll take the last part, Nigel, first. Good morning to you as well. We are looking at about 50 to 55% growth this year. Mind you, last quarter was about, I think, 83%. So we are well on target for that. And margin levels, we stay at the current levels of around 9 to 10% this year. Zoyer's contribution has been very healthy. It's been very strong. We are seeing multiple use cases emerge, whether it's utility bill payments. Petty cash has just really surprised us to no end. We never realized how much of a pain it is. Something which I think everybody knew, but nobody had really focused on because it's not a glamorous, problem to solve. But it's a deep problem to solve. Any NBFC, AMC, brokerage house, retail chains, organized retail is growing rapidly in India. And this really helps them cover for fraud, leakage, compliance. Just before I came on the show, Prashant was mentioning of this fraud. See, this is a big problem. As you digitize more, frauds will increase, whether it's on the B2C side or B2B side, any side, right? So the platforms which are able to curb that, to mitigate that, are invaluable because what would this gentleman have given for saving that 11 crore? There's no price that you can assign to it in terms of a platform or something which would have alerted him. So that's the value that we are bringing, and companies are recognizing it. So Zoyer is growing very healthily. I can't give you a split because a lot of cross-selling has happened now. So the same customer who used to earlier be a Save or a Propel customer is also taking Zoyer. The same card is being used, the same corporate credit card is being used by the employee for her expenses as well as her branch expenses. And that's what we want. We want more and more spends to come in from the same instrument. And the software is able to segregate that for the corporate.
Right, Avinash, we'll work with what we have. So about 60% growth expected this year with margins in this 9 to 10% band. Got it, and perhaps an acquisition as well, somewhere around the corner. So that's our key takeaway. Thank you very much for the call this morning, and good luck to you with those plans. Okay, Zagal, stock's done really well, a doubler over this year.
There was a news flash, Talbros Auto. It's a small, it's not so small now. It's a high-quality automotive component company. They, along with the joint venture companies, have won a meaningful sized order. I saw that flash. I think
475 crores thereabout. Yeah.
Stock, of course, underwent, I think, a split. 300 rupees. So we'll see how that one opens up.
And they did 800 crores last year of revenues. Yeah. So it's sort of a backdrop.
Rapid growth over the last year.
That's a big order then. I mean, if it's 800 crores of revenue and they've announced wins of about 470 if I saw that flash.
We don't know what Talbros' share is because it's along with joint ventures, but still, I mean, I think it's significant.
I think the stock has done fairly well in the past, but I don't think there's any much institutional holding. So,
all right, well, let's take a quick commercial break here.
I think Devin.
Again, Devin is with us.
Devin is with us. Yeah.
Maybe Devin, you want to? I don't know if you have a view on Zagal. Otherwise, I wanted to ask you about this entire defense space because yesterday Nimesh was highlighting the JP Morgan initiation note. Stocks have fallen quite a bit. I think there were 3 names from JP Morgan: HAL, BEL, and one more. So your thoughts there?
Yeah, Prashant, I think defense remains, I think, absolutely very convincing story. And fortunately, in the current corrections in the stock prices, some of the companies have also given the opportunity at lower levels. So yes, I think given the kind of visibility of next 3 to 5 years in form of the contracts that they have already signed in for execution, and largely to do with the government spending program, I think that's where probably we are seeing the higher amount of activity continuing for most of these companies which you mentioned. So I guess I think the selection, the choice will be BL, EML also at the same time, and HL of course. I think the prices have corrected. So certainly I think they will need buying opportunity if further fall comes in the stock price. I think it will be buying opportunity given the kind of strength of next 3 to 5 years of visibility in the business.
All right. We'll take a quick break here. Thanks very much, Devin, for those views. We're going to come back in just a bit from now, and we'll touch upon some technical trading ideas as well. So that's coming up. 11 minutes to go for the pre-open session. Mitesh and Sudarshan on the other side. Stay with us.
Welcome back. Hope you're having a good morning. As promised, we have our technical experts who join us. Mitesh as well as Sudarshan join in this morning. Good morning, gentlemen. Thanks a lot for joining in. Mitesh, you go first. The last couple of sessions have been pretty good. Yesterday was a day of consolidation. Today, we're likely to start off 40, 50 points higher. How do you approach trade?
So, good morning, Nigel. I've been advocating that this is a market which, in the short term has become buy on declines. I think 24, 150, 24, 120 is a zone which is acting as a very strong support area in the short term. And then there's this gap up which happened on Monday with the Maharashtra state election numbers coming out. So I think in the short term, I think the market is mildly biased on the upside. The first pivot is around 24,350, which is where we had intraday highs on both Monday and Tuesday. And I think we will possibly once we cross it, then we'll possibly look at a target of 34,500. So for the time being, I think we're playing for this range with some long bias on IT, automobiles, etc.
Got it. All right, Sudarshan, what about you?
Yeah, good morning. See, I have 2 points. First, we have to decide whether this is the end of a correction. We fell from 26,300 to 23,300, 3,000 points. That's a correction. So if this is the end of the correction, then the bull market resumes again, and every small dip becomes a buying opportunity as it was prior to the correction. And if this is simply a knee-jerk reaction to the Maharashtra election results, then this will fizzle out. I'm assuming that this is the end of a correction. It was a very decent 3,000 point correction that cooled the markets, and our original bull trend should resume. And therefore, my suggestion is that if otherwise, buy every small dip.
Buy every small dip. That's pretty clear advice. Gentlemen, morning. Sudarshan, what would your specific stocks be? What would you like to buy?
Well, it's a cheerful day. I will start with Balrampur Chini, where, so many stocks are following the index. Their corrections are also ending. And I am assuming this was a correction, so the end should result in the beginning of a new up move. That's for Balrampur Chini, where buy with a stop under 530. News, which is giving a very decent base building process for 3 months now, is a buy with a stop under 575. Syngene has a similar base building exercise, buy with a stop under 890. And Balkrishna Industries is that buy on a correction and possible trade, buy with a stop under 2745. Stay on the long side.
Okay, all right. Mitesh, you want to fill us in with a couple of picks. And also, I wanted to ask you your view on Reliance Industries. Good to see that one is holding up. Where is it headed?
Well, I'll start with Reliance, Nigel. Disclaimer that I have some positions on the long side. My belief is that Reliance is also giving signs of reversals from oversold levels. So a good bounce back is something, which traders should expect. I would look at a first target of around 1324, 25 here. And once that level is crossed, possibly even 1378 zone. So in that sense, from a trading point of view, we have a positive bias on Reliance, and I already mentioned my disclaimer. Coming to my picks, I also have buy on Syngene. I think Sudarshan also mentioned it. Very good charts, good signs of a uptrend here. So buy for a target of 935, 940. Keep a stop at about 898. A buy on M&M with a stop at 2950. Here I would look for targets of around 3060. And a buy on Ashok Leyland with a stop at 227 for a target of around 240 on the upside. I have one sell call though. That's MCX. Sell here with a stop at 6120 for targets of 5,900.
Okay, all right. Thanks a lot for that, gentlemen. For the time being, we'll slip into a short break. We'll come back. We'll get you pre-opening rates. We'll also be joined by Harshit Kapadia of Elara Capital. Stay with us.
All right, welcome back. There's a minute to go for the pre-open session to kick off, and we'll look at prices as they start to come up. Rajesh Palvia is VP Technical and Derivative Research at Axis Securities. He's with us now to take some questions. Rajesh, good morning. Good to have you with us here on CNBC as always. Your thoughts, Rajesh, as we start another day. And the backdrop is not bad at all. Overnight markets are up. There's a little bit of geopolitical possibility of peace, at least for 60 days, and we'll see after that. And of course, I mean, foreigners bought after almost 2 months of non-stop selling yesterday. Small, but there was some green. Your thoughts, how are things set up?
Good morning, Prashant. Yeah, so it's really freely playing out in the market. Nifty comfortably now holding about 24,000 level. Nifty able to regain about 20-day moving average since last 2 trading sessions. Both indices, Nifty, Bank Nifty manages to hold out around at 200-day moving average. So looking at the broader market, we believe that this upward momentum may extend further, as the major put-based concentration for Nifty is now placed at 24,000 strike, and we believe that the way market breadth has improved in last couple of trading sessions, that clearly giving us confidence this really can extend, and possible target for Nifty in the near-term perspective towards 24,400 to 500 we could see in next couple of trading session. So I think one should remain on the buy side of trade. Any minor dip should be used as a buying opportunity in the Nifty. To play this up move, we are initiating here to buy 24,200 call option, which was closed at around 109 rupees. And we are projecting target for this call option around 165 to 170. Keep your stop losses around 70 rupees to buy this call option. Even for the Bank Nifty also, we believe that Bank Nifty is almost hovering near to its immediate call concentration area, which is placed at 52,300, 400 zone. Any breakout above 52,400 may lead to a further short covering action in Bank Nifty also, and then possible rally can extend to 52,700 to 52,800 in the near-term perspective. So I think on the Bank Nifty also, one should remain on the long side of trade with stop loss of 51,900 till these levels are intact. Buying is likely to emerge in this Bank Nifty also. On the stocks front, first stocks where we are focusing is on the pharma sector, that is Biocon. Very strong buying in the previous day. Long built-up is there. Stock is now negotiating with its previous swing high. I think the way stock has shown strength in last couple of trading sessions, there is a possibility Biocon can extend further more gain. 365 to 370 is the next target for the stock. Keep your stop loss around 343. The second stock is from mid-cap IT, that is Birlasoft. After consolidation of 4 weeks, stock managed to view breakout of falling trend line on weekly chart. We believe that Birlasoft can extend its gain. 620 is the next target where we are focusing. So one can buy this Birlasoft also with stop loss of 578. And the third stock is Polycab. Again, stock managed to view breakout of last 4 days consolidation, and the way stock is placed on weekly and daily chart, we believe that here also there could be a furthermore upward traction we could see. So 6,980 to 7,000 is the next target for the stock for trading point of view. One can place a stop loss around 68.30 to buy Polycab also.
Okay, those are lots of ideas to work with. Rajesh, thank you very much for that. Appreciated. You have a good trading day, and we will touch back soon again. Let's move on. Now, the 9 a.m. theme this morning is capital goods, because the big question on the market's mind is that after the compression that we've seen in central government capex in the first half of the year, it's actually down by about 15%. Will the second half of the year see a recovery? And if yes, what's the outlook on capital goods stocks and some of these capex plays? Harshit Kapadia, who's the analyst and vice president, industrials, defense, railway, consumer electricals, consumer, durables, I think even electronics. He tracks the entire spectrum at Elara. He's with us now. Harshit, thanks so much for being with us. So that's really the key question, right? I think we're coming to you to understand this market's pivot. There seems to be a small pivot back towards capex names because of this expectation that second half things will pick up. So let's break it down sector by sector, starting with some of the major capital goods equipment makers, power equipment makers. I mean, look at the news headlines, right? The HVDC orders yesterday. Hitachi and BHEL, Power Grid itself is getting more orders. They announced some wins in Rajasthan as well. So the power space itself is really geared up. Then there's, of course, everything that's happening in renewables. Today's NTPC renewables listing. So you tell us, if someone wants to play capex, what opportunities does the power space and the related capital goods equipment space have?
Sure. Morning. So you're bang on with the thought that yes, capex cycle is expected to improve on the second half. Power T&D is the major theme that one can play within this particular space because the power generation, both on thermal as well as renewable, is on a very strong path. And with HVDC order, one has already come out. There are 2 such orders which are in tendering stage, which are expected to show results in next quarter. So the pipeline is extremely strong there, and even we are sensing the other projects are also on a strong path as far as transmission capex is concerned, and even the state discom capex is also seen on a rise with elections now being off and most of the government duties which are back to them, and we are sensing the tendering activities also to pick up. For some of these specific names. What to play would be, one topic is Siemens if you want to play on a large cap theme. This will be followed by Case International, especially on the power T&D theme because they have been bagging a lot of orders as far as Case is concerned. Followed by KEI Industries because everywhere you go, manufacturing, data center or power, cables are something which is required. So that begins our specific pick on the power T&D theme if you want to play out. On the other cap goods name which are corollary to this particular theme would be Elecon Engineering is something that we like on the mid cap space for cap cable sector.
So Harshit, you've given us a couple of names. You're saying you can start with Siemens itself, and then there's KC International, KEI, because of power T&D and the fact that you need cables, and there's expanding grid capacity as well, right? Because to feed all these data centers, you need tons and tons of power and huge units of power. And therefore, but on Siemens itself, why Siemens? Of course, great numbers, what we saw yesterday. But why Siemens? Do you have coverage on something like a Hitachi? And there's so much happening with GE as well, right? GE T&D, of course, the corporate action aside, with that OFS which is going on. But in the MNC names, and there's ABB as well, why do you particularly pick Siemens?
So if you look at Siemens, they have again shown that they are fairly resistant as far as order inflow is concerned, whereas others have not seen good growth in last first half. But Siemens has been able to maintain the 6,000 crore quarterly run rate, and that's been one of the strength of the company. For Siemens Global as well, Siemens India is the fastest growing market, and we have seen, the parent management coming to India multiple times to give support, on the mobility front, which is the big transition which is happening, supported by the digital industries. They are also infusing capex of 1,000 crores in India. This has never been happened in such a huge capex in India at one go. So that has been a trend change which is happening on Siemens. But yes, others are also looking good. ABB is also placed very well, given that it has become more of a product company. However, margins is something that we think has peaked out. The growth will continue given the capex is happening. On specifically Hitachi and GT&D, though I don't cover, but I think they are also following names that one can add to his portfolio. Given that the HVDC theme is really playing out well, Hitachi is placed well, and given that even the railway transition business is happening, so that can also add value when you look at Hitachi Energy.
Okay, got it. So takeaway is that maybe you feel that for ABB, margins have kind of, peaked, but the others could offer good opportunities. So that's on the power and power equipment side of it. Very quickly, because you cover defense and railways as well, again, there's interest coming back to this side of the market. Yesterday, your peers at JP Morgan wrote a note. They think that stocks are now offering value after a 25 to 40% correction. Would you pick anything else in PSUs? On railways as well, when we saw the new order announcements, the new approvals after the cabinet, I think 9,000 crores or something. So again, between railways and defense, what's better, and stocks that you like?
One thing that we are sensing as far as ordering trend is concerned, we are saying railway is going to see a faster and a quicker pickup in trends. We are sensing that locomotive tender is going to be out in some time. Even an additional Vande Bharat tender is going to be out. So railway is looking to revive at a faster pace, whereas defense probably may see in Q4 the trends of order inflow coming out. Having said this, defense is something that we see on a continuous basis. The capex is going to be rising, and with indigenization theme, the PSUs are the first companies who will get the benefit out of it. And within that space, given the company which has an order book, though they have not executed well till date, but now we are sensing that from second half, given the exports is on the rise, given some of the execution has picked up, and some issues which they were facing has been largely resolved, Bharat Dynamics remains to be our top pick within the defense space, followed by Bharat Electronics and then Hindustan Aeronautics. But Hindustan Aeronautics would be a little bit longer term play. For next year, we are sensing the order inflow opportunity for HAL would be more than 1 lakh crore if things plays out well. That's how we look at defense. And within railways, rights is something that we really like, though the margins will remain to be a challenging thing, but growth is going to come back as they are sitting on a very strong order book of close to 15,000 crores, largely on the export side of the business. So that is going to help rights make up the execution from FY26 onwards.
Got it. All right, Harsha, thanks very much. So you're sticking to some of your old favorites, HAL, BEL, and Bharat Dynamics as well on the defense side. And Siemens is a topic in terms of the MNC capital goods plays. So some thoughts coming in from Elara. Thanks very much for that.
Absolutely, and interesting chat. And by the way, you'll hear from two players, that is Hitachi and then KEC as well, a little later here on the program. So those conversations are coming up on the corporate side. 9-10 calls, what do we have? Mitesh and Sudarshan are with us. Sudarshan, what do you have?
Well, consider buying Syngene with a stop under 890.
Okay, Syngene buy under 890. Mitesh, what about you?
I would have recommended M&M, but I think it's opening much higher. So, I'll go with the buy on Ashok Leyland for targets of 240.
Okay, Ashok Leyland, targets of 240. Got that. Well, actually, right in queue, we're going to talk about M&M. Sudarshan is back with us to put the spotlight on that EV launch, and Hyundai, there is an initiation report as well. So take it away.
So talking first about M&M, it will be in focus today on the back of two EV launches. Company has launched BE6E and XEV9E, and price for BE6E is rupees 20 lakhs and for XEV9E is rupees 23.5 lakhs. As per brokerages, these prices are looking attractive, and sales for both these products will begin in January 2025 and deliveries by February 2025. What do brokerages say? MS says models are high on performance and are feature rich, and even prices are in line with premium variants of best-selling ICE models. ICE basically petrol and diesel, but offtake will be key to watch. Elara says company has done all that it takes from their side, and company has a capacity target of 10,000 units per month for FY26, and this target is higher than the size of the entire EV industry currently. Coming to Hyundai India, JP Morgan has initiated coverage with an overweight call, and target is rupees 2,200 per share, implying an upside of almost 20% from current levels. And positive thesis is premised on first, a premium portfolio mix SUV currently contributes 68% to its total portfolio, and there's a potential market share tailwinds driven by new models and capacity. Companies focus on capex efficiency and utilization, and lastly, export contribution, which provides cushion against domestic cyclicality. So keep an eye on both M&M and Hyundai India.
Okay, all right, thanks. Thanks a lot for that, Sudarshan. Well, let's hop across to Rima. She's here to tell us about LTI Mindtree. Rima?
Hi, so LTI Mindtree held its analyst meet yesterday, and the key takeaway is the company is gunning for $10 billion of revenues by 2031, 2032, with AI being central to everything that they do. So $10 billion is the revenue milestone. Last year, they ended with $4.3 billion. The management is hopeful of achieving this on an organic basis. If an opportunistic acquisition comes on board, they will take it, but that will be incremental revenues. Now, how will they achieve it? One is scaling up verticals like BFSI, high tech, but they're also looking to grow other verticals like manufacturing, resources, healthcare. But I think at the core of everything, what the management spent time talking about is AI. It's AI in everything for AI and AI for everyone. They're also looking to mine the Fortune 500 clients better. But apart from giving that $10 billion revenue milestone, the company said that they need to do a double-digit revenue growth to achieve their EBIT margin aspiration of 17 to 18%. Just in the near term, they did indicate the discretionary spend has not returned, but now with the US elections out of the way, many clients will finalize their budgets in the coming months. But for now, discretionary spending is not back.
All right. It's not back. Rima, thank you very much for that. We've got the market open coming up in the next couple of seconds. There you go. What do we have? First rates. The Nifty is starting absolutely flat, 24,181. The Nifty Bank is down about 0.13%. Sensex is flat. Mid-cap index is starting slightly higher. So 55,985 on the mid-cap index. There's a little bit of green. By the way, yesterday the mid-cap index sold off in the last 60 minutes of trade. Completely sold off, and but the small cap index had about 0.8% gains by 3:30. What do we have in the Nifty heat map? Just an overall sort of quick look. 25 down in the Nifty, and you got some 30 names which are down, 20 names which are starting in the green. So that is the Nifty stock heat map coming up on your screen. Let's get it down to individual names. Surabhi.
Okay, we're looking at very flat to muted cues right now at the index level. Talk about the winners, and this is the stock that we've been flagging off right from the morning. M&M is electrified, should we say, 2% higher. That makes it the best Nifty winner for the time being. Then there's Coal India, NTPC, BPCL, a couple of PSUs are doing well this morning, even BEL for that matter. There's a bit of green out there. Adani Enterprises about 0.5% higher, but then that's about it. It's very quiet with the bigger stocks like HDFC Bank, Kotak Mahindra Bank. Shriram Finance is cooling off after 2 spectacular days, 8% up in 2 days. And finally, there's some red coming in. Speaking of red, Bharti Airtel is cooling off after yesterday's good showing, 1% down. Cipla, Tata Consumer, Britannia, Lever, so there's a fair amount, Nestle as well, so there's a fair amount of FMCG on the way down this morning. Throw in a Titan as well. So basically, consumers in a soft spot. Reliance, I saw open out on the negative side of the screen. Yeah, it's still down about 0.3%. So pretty flat, fairly muted. That's what we have, at least for the time being. Even the mid-cap index down about 0.25% for now.
Well, that's right. A few stocks, though, deserve special mention. You have Ola Electric. That's higher in today's trading session. They have launched a new range of scooters as well as PowerPod. So, both that stock, in fact, is moving higher on decent volumes. So that comes up for you in the screen. Fed-backed financial services, the volumes are quite high actually, and the stock is up more than 10%. In comparison to what we normally see, volumes are very, very high for just a couple of minutes of trade. So Fed-backed financial services should come up for you. Up 18% as we speak. We'll just check in terms of news flow on that one. Talbros, they won a big order, 475 crores in a JV. So the street likes that. That one as well is moving higher. Sagility, that's a newly listed company. That's another big volume mover. That's up close to around 8 to 9%. Massive volumes on that particular name as well. Swiggy, well, those who got allotted in that IPO, and there were quite a few who did because it wasn't oversubscribed to a large deal. Well, the stock is headed towards 500 rupees now. So good move is what we're seeing. Volumes picking up on that one as well. On the flip side, ZF Commercial, because of that block trade that's just taken place, 5% equity takes place. That one's down close to around 14%. Interesting to see what happens from here. Prestige Estates is another one that's losing out big time. That's down close to around 4.5%. Volume's fairly decent as well. So Prestige Estates comes up for you. And Adani Green is another one that's reacting in the red. As we speak, the markets are as flat as can be. That's the headline index. The mid-cap index is well flattish and the Nifty Bank. But two stocks that deserve special mention. Fed-backed financial services now up 20%. Sagility up close to around 10%.
You know, Nigel, Sagility was up 10% yesterday as well.
Yeah.
Ended higher, circuit up. And by the way, you know, it's one of those names which came to the market recently. I think it's about not even 10 days old, maybe 10 days old. 12th of November is when it listed. And it had a pretty muted listing, flattish. It's a company which is in the technology space, works with, insurance companies and, customers of insurers in hospitals and insurers, essentially, in the US. That's the space it works in. It was a completely private equity-owned play. And the private equity in question had sold some of the stake, pure OFS, I think it was, in the IPO. But 2 days, 20% now, with today's 10% pop. Triveni Turbine is another one. Triveni Turbine, by the way, is the number one volume-led gainer. I'm not sure if there's news flow, but it was a big mover yesterday as well, which essentially means that in 3 sessions, actually 2 days and 5 minutes, that is, the third day is today, it's moved up from 680 levels to 880. There's a 200 rupee move in 2 sessions flat. Let's see if these gains hold this morning. And of course, Siemens, Vivek was telling us, I think you guys mentioned that as well. Ola, I think we mentioned that one, 4%. Aster DM is up 3.5%. It's got large volumes, Aster DM, and it was a bit of a mover yesterday as well. TTML came up, it was a very large mover yesterday, TTML, on big volumes, and it is a big volume-led mover today as well. Swiggy, you mentioned, Sagility, we highlighted, Cochin Shipyard. Keep an eye out on these, defense names as well. So yesterday it was Garden Reach. On the shipbuilder side, Garden Reach was up about 7-8%. Cochin is up about 4% this morning. KEI is up 3.5%. There is Genesis, which is another company. I think there's an initiation report from Elara on Genesis, and that is up about 4%, but it's run up in the last 3 days from 750 to 900. And today is the third day of that move that we have on our hands. FedFina, Nigel mentioned earlier, with that 19.5% pop. There is 361, the wealth manager, which is up 5%, 1147 on 361. So, yeah, I mean, things are just opening up, and there's a fair bit of activity which we are looking at. Yesterday, by close, the biggest volume-led loser was BSE, and it's got tremendous volumes this morning as well. It's the second largest volume-led loser. It's only down 2.5%. Yesterday was down 5%. It's down about 2.5%. But look at volumes right at the word go within the first 2 minutes. Surabhi?
Remember Talbros we were just discussing a while back. So that's holding on to an 8% gain at this point in time on the back of those auto wins. Cochin Shipyard, some more defense names are also up and about. By the way, if you're wondering why Fusion Microfinance maybe is not reacting, because typically, as the market wisdom says, rating agencies are the last to react. The stock's already, fallen some 70-80% this year. So, two of them have, I think one has put it on a ratings watch with negative implications. One has cut ratings. But anyway, it's already in the price, perhaps.
The police in Hindi movies.
Der se aate
hain. Without, of course, a specific comment on anyone per se. But, so yeah, absolutely. And we'll see what comes of it. Markets actually, again, like a traffic light, right? Blinking red and green, nothing on it. 5-point change with about 2 or 3 minutes of action behind us now.
Just one more stock, Tilak Nagar Industries. Just take a look at that stock. The last few days, it's moved, I think, from around 340 rupees all the way to around 400 rupees, and volumes as well fairly large. So the street is sensing something. I remember we had a chat with the management as well. We were asking them whether they're doing some inorganic growth. They were sounding fairly confident on business as well as on margins. But that one has been one of the big movers, up close to 3%, building onto gains that we've seen in the last few sessions.
By the way, Nigel, it reminded me that Imperial Blue deal, I'm told, is almost done, but it's not Tilak Nagar.
Oh,
that's what I'm told. But we'll see.
Interesting.
What comes off it. Sanjeev Prasad is with us, Managing Director and Co-Head at Kotak Institutional Equities. Sanjeev, good morning. Great to have you with us here. Thank you for your time. We're chatting after a while. So, I'll get to specifics in terms of earnings estimates, etc. But the big question for a lot of the local audience, every day FIs have been selling and selling and selling. 2 months now. Yesterday they were small buyers. What is your sense, Sanjeev? Any thoughts at all? Are we coming to the close of this episode?
No, it's hard to say, to be honest with you. But if you look at the FI flows, I think when most people look at the FI number, it's actually a very misleading number. So it's a negative $2.5 billion, calendar year to date. But if you look at the breakup of that between primary, secondary, active, passive, it looks like the active secondary flows have been negative for a while now. So just to give some numbers, $2.5 billion negative calendar year to date. Out of that, you have about $12 billion of primary inflows, by the way. So if you strip that aside, the secondary numbers are actually much more negative. And you also had about $13 billion of passive inflows. So if you take that out, you probably have something like $25 billion of active secondary selling in the current year compared to the headline number of $2.5 billion. So that would suggest to me that many of the active fund managers have been negative for a while. And there are enough reasons for that. Valuations have been on the higher side for a while now. And you have seen the earning numbers have not been anything great. People, I guess, have found some opportunity in China in September, October. And I guess right now people are seeing a lot many opportunities in the US, I guess. So as far as emerging market active fund managers are concerned, the big challenge for them is absolutely no inflows. Because the EMs as an asset class haven't given much of returns for the last 10 years now. And the US market doing so well, strong US market, strong US dollar. And obviously the asset allocators are not inclined to look at EMs as of now. So I suppose this trend could very well continue unless and until the markets, settle at a level where valuations become a lot more attractive for active secondary market investors.
Well, according to you, and you're a completely numbers, fundamental focused analyst, Sanjeev. Where is the cushion? At what level will it interest investors?
You have to look at this market more on a stock by stock basis or cap by cap basis. So if you look at the large cap names, Nifty itself may not look very expensive. It's about roughly 21 times, 1 year forward kind of a number. So it looks okay, but keep in mind the fact 2 things. First of all, we are looking at pretty strong earning numbers for FY 2026 as of now, 16.5%. So whether that will come or not come, that's a big question mark given the cyclical slowdown that we have seen at least in the first half of this financial year. And second thing is, there are some structural challenges which have started to emerge in terms of the job creation and so on and so forth. So you could possibly see more of a earning downgrade as we go forward. Third thing is when you look at the Nifty valuations, again, it's a very misleading number because about 50% of the net profits of the index comes from lower PE sectors. 27% comes from banks, about 5% from metals, 19% from oil and gas, which are, trading at between 13 to 15 P. If you look at the rest of the Nifty, valuations are very, very expensive. Beyond, I would say banks to a large extent, everything else is expensive, both on an absolute basis versus history, versus all the challenges that are coming up, versus earnings growth, whichever way you cut it, valuations across the board are, I would say, full to frothy in some cases also. So that's the challenge. You still haven't come to a level where valuations are starting to look attractive. So again, 2 more points I will highlight. If you look at the stock correction, they have either happened in sectors where you have seen massive earnings downgrades, right? Which hasn't really helped the case of the valuation, because valuations have stayed on the higher side given the fact that earnings have got cut. And the second area where you have seen earnings where you have seen a massive price correction in the entire pack of what I call as narrative stocks. And many of them corrected between 20 to even 50% in some cases. I think they need to be significantly lower. The real value should be about 20 to 50% of the current market price, even after correcting so much. So the long way to go in many of these, mid cap, small cap, narrative credit stocks. So that's the whole challenge. The headline valuation will look okay, but if you look beneath the bonnet, there are a lot of challenges when it comes to valuations. At max, you would say, at best, we can say you have fair valuation for banks. In the case of consumption, outsourcing, pharmaceutical, IT sectors, etc., and pretty frothy for the rest of the market, I would say.
Okay. Frothy in large parts of the market, maybe okay for banks. And the narrative stocks. Great to have you, Sanjeev, on the show as always. So let's talk about the narrative stocks. And if I get the hint correctly, I think this is exactly the space we were discussing with an analyst earlier. The PSU space, CapEx, right, sort of long gestation themes. If you could just elaborate on your thoughts on the so-called narrative stocks, what specific pockets are you referring to? Because the thing is, there's still a lot of ordering activity. I mean, look at the Hitachi order yesterday, or, Power Grid is getting orders. Railways are still dishing out some orders, as with defense. But again, I think the question is how much is still left on the table? So if you could just elaborate that point, narrative stocks still not good enough?
I think you have to look at in the context of, the market cap of these companies versus, the profit numbers and potential profit numbers, assuming all the good news. I will give you a couple of examples. I mean, you talked about Cochin Shipyard in the morning. The stock had done well in the last 3 days. I mean, this is a company which is about almost 40,000 crores market cap now. The net worth of the company is only 50 billion rupees, 5,000 crores. So it's trading at 8 times book. Last year's profit was about roughly 800 crores. Yeah. So it's trading at 50 times P. What sense does it make, to be honest with you? You have companies like Hindustan Copper, 27,000 crores market cap, 3 billion rupees of profit last year, roughly 25 billion rupees on net worth. It's trading at more than 12 times net worth. You have ITI, loss-making company, trading at 27,000 crores market cap. IRFC, 2 lakh crore market cap, more than 4 times price to book for a finance company, which is, I don't even know, it's more of an intermediary finance company. That's it, right? Wholesale borrower, wholesale lender. So there are so many such examples, BHEL. I can go on and on. There are enough number of examples which I could narrate. I mean, I just struggle with the valuation of many of these names, to be honest with you.
I completely take that point, and I understand the pain, Sanjeev. But I guess the thing is, when forget FPIs, but when there's like 40,000 crores of liquidity hitting the equity markets just from domestic, mutual funds. I'm not even talking about other institutions and insurers and EPFO and so on and so forth. But if there's that kind of money hitting, then I don't know, how do you wrap your head around the valuation argument? And I think the issue with a lot of investors is going to be how much cash can you really hold in portfolios, even funds, even mutual funds. Many of them are still sitting at 8-9% cash levels. Relatively speaking, aside from banks, would you look at buying anything in the market now?
You say understand the pain. I don't know if, I'm actually fine. I don't have any individual stocks in it. You'll find out the pain for many of the investors who are in the stocks, sooner or later, I would say, when the stocks eventually they will correct to 20 to 50% of the current, current market cap. So there is going to be a lot more pain in the market, I don't have much doubt about that, because none of these, valuation are really stable. Coming to flows, see, this flow is a reflection of expectation ultimately, right? Obviously in the market, somebody buys, somebody sells. There is no money in a secondary market at any given point in time. Why is so much money coming? Because investors have decided that they can, and they will always make large amounts of return in the market, which has been the case in point. Over the last 3.5 years, returns have been very good. But if you look at the last 6 months, returns have become pretty modest. 3 months, it's negative. And if things continue like this, and as the trading returns start declining, you would assume that the flows will also start to come off. Flows is just a reflection of the expectation, and expectation based on whatever people have seen in the past. So as of now, people are still looking at the rear view mirror, assuming you have a lot of money to make in the market and pouring in money. But obviously, there's no valuation support for most of the markets as we're discussing. Yeah, the stock prices can go up, but ultimately one has to look at value versus price equation at any point in time. And in most cases, there's a very large disconnect between price and value. In terms of the price being significantly higher than the fair value of the companies.
Yeah. You've used BHEL from the power space as an example. You've used that as an example to highlight some of the difference between value and price. But any thoughts on the space? By the way, we have the management of, it reminds me, Hitachi Energy. The management is coming up with us in just a bit. I mean, clear leader in their space. Stock's done very well. I don't know if you have any Thoughts at all, Sanjeev?
I'm sure there will be pockets of, value, a value in the sense, the news flow would be positive. But whether it is sufficient to justify the current market cap, that's the call investors have to take. And we want to talk about bail, let's assume 100% of all the orders which the government of India wants, 80 gigawatt, will be given to bail over the next 8-9 years, which is the target, right? And you do a simple math, you take, let's say, 60,000 rupees per gigawatt, multiplied by 80 gigawatt, that comes to 4.8 trillion rupees. You take a 5% PAT margin, you come to 24,000 crores. As the total potential profit pool for the entire industry over the next 8 years. The market cap for BHEL is 80,000 crores. I mean, you reconcile the math over here. Even if you take 10% PAT margin, it will come to 48,000 crores. So that is what I'm talking. And we're not even discounting the cash flows, by the way. You are in this math, you're assuming all the profit comes today. If we discount 48,000 crores over 8-9 period, it's obviously going to be a much lower number. But that is our challenge over here. Anybody who's numbers focused, bottom-up focused, it is very hard to reconcile the fundamentals with the kind of market cap people are giving to stories at this point in time.
I don't know, and that's a very nice illustration once again. I mean, I think, we need to kind of revisit that sometimes because a lot of, as you've, I think, written in your reports as well, a fair bit of narrative, etc., which, of course, has supported many of these sector stocks, etc. Sanjeev, thank you very much for joining us. Great speaking with you, and it's a pleasure. And look forward to our next chat. But as promised, Nigel, we have the Hitachi Energy Management with us.
Well, let's get straight to it. Hitachi Energy, that's a stock on our radar after BHEL and the company's consortium won an order from Power Grid for a renewable energy transmission project between Gujarat and Maharashtra. To talk more on this HVDC order win, as well as the outlook on business, we're joined by Mr. Venu, the MD and CEO at Hitachi Energy India, who joins us. Hi, Mr. Venu. Good morning. I recall when I visited your facility in Karnataka, you said, Nigel, have patience. Things are in the works and hopefully things will start fructifying. And you also told me this, that earlier one HVDC order used to come every 5 years. You expect that frequency to go up, and so it is. We have a big order win. Now, give us a few details, and we're trying to get a couple of numbers out of you. Most analysts estimate the total project cost to be around 25,000 crores odd. And out of that, the equipment cost could be around 40 to 50%. So roughly this order size could be around 10 to 12,000 crores odd. Ballpark, these numbers should be correct?
Thank you, Nigel, and very good morning, and thank you for having me in your show. And as you rightly said, we have been discussing this, and we not only were discussing this as a company, we have been taking a lot of actions over a period of time. Actions in terms of in terms of adding additional capacity or creating a new factories. In the last 2 years, a combination of brownfield and greenfield, we have added 5 factories, and that's all basically in anticipation of the demand tailwinds arising out of this energy transition, and especially the HVDC, which is a very, very critical technology for bulk transmission of the renewable, bulk integration of the renewable things in that. So by virtue of this technology, and it's become a seamless transfer of renewable generated from one concentrated center to all the way bringing it to the load center over a distance of 100 kilometers. And yes. I'm coming back. And normally, these are we are not given this order number in the note which we have sent yesterday or day before yesterday. So what I said, this is a very substantial order for us, and it gives a 4 to 5 year period where we're going to execute this particular project. And most of this is manufactured locally in our factories in India.
Got it. All right. We know the technical, advantage that you have, and y'all are most equipped. But, let's give a 10% deviation on both sides. 25,000 crores should be a fair number to work with. 10% deviation on both sides. Is that fair? And equipment cost typically for an order like this will be 40 to 50%. Ballpark, these numbers are correct?
The 25,000 crores, what you're talking about an SPV, that does include, what I understand, is also transmission lines, which we don't do the transmission line. But our equipment will be anywhere, depending upon the size, scale, etc., anywhere between 50-60% of the total.
So transmission is not, you're not going to be part of it. So how much would it typically be in a project like this, transmission as a percentage of the total order size? Typically,
our size will be in the range of 50-60% of the total SPV project.
No, so
more than 50, depending upon what the size, etc.
So 25,000 crores you said is including the part of it which you all are not into. So X of that, how much could it be? Will it be closer to around 20,000 crores?
What I'm saying is that and the total project, if you take, our portion will be if 50, 60% or 70% depending upon the size, etc.
But what is the total size, sir? Is it 20,000? Is it 25,000 crores? We got it's 50 to 70%. It could be roughly. But what is it? 20 to 25,000 crores? Could we work with that number?
Nigel, as in please respect, we are not given that because there is an ongoing some other things are there. So
just give us
what I can tell you is
one more
that
detail.
It's quite a substantial, and it gives a revenue visibility of at least 3 to 4 years.
Give us one more detail. You're in a consortium with BHEL. I'm looking at some back of the envelope calculations, and they're saying out of the total equipment cost, Hitachi could be around 75%, BHEL could be around 25%. This should be the rough ratio, 70-30 approximately?
In the joint venture, yes, you are right. We are in the 70% and BHEL is in 30%.
Okay, so Nigel has tried, and I think you've given us as much as you can, which is around 70 to 75%. We'll have to work with the numbers and wait for it to come through. So let's talk about the order book growth. As the numbers that I have, I think as of the end of the second quarter, your total order backlog was around 8,900 crores, right? And now this big ticket order has come through.
Right.
So, and you're not giving us the exact quantum, but will there be more HVDC orders of this kind? And you've been very bullish on data centers, on transportation, on the renewable sector. Give us more color on the order book. How is it likely to be by the end of FY25? Right. And what will the breakup be? Because you have also said that your margins eventually should go to double digits. How is that going to happen? Which is the segment in the order book that will be fetching you maximum margins? And when do you touch double-digit margins?
Right. So absolutely, as you rightly said, let me touch on the HVDC. We have been saying that HVDC previously used to be one HVDC project for every 5 to 6 years in India. But today the need of the hour is to have one HVDC project per year, or as we going forward, it may be 2 HVDC projects per every 2 years. Okay, that's a demand is going to be there in that. But based on our publicly available information, we see at least 3 more HVDC projects are coming under bidding, or some of them are in the bidding process, and where we are also looking actively those 3 projects as well. And in addition to that, we have been also maintaining very consistently saying that we have a very clear strategy on the growth segment, high growth segment. Data center is one among them, and then renewables, the transmission, and the industries. And in addition to that, we also talked about the 2 other levers, that is our exports. We brought exports on a consistent basis, 25% of our total order values, and also the services, because we have been present 75 years in this country, and we have created a huge, pipeline of our install base, and we would like to leverage that install base to offer our digital and services to our customers. And the services is also high focus on that. We are taking a lot of actions in driving the service business for
So the margins, so how do you get to double-digit margins? Yeah, which is what you've been promising.
Margins is a combination of growing ahead in the market and also the exports. We are consistently driving the exports. And the third one is the service, definitely will give a much higher margin in the service portfolio. In that, all these 3 combination of that, and in addition to our various other initiatives of whether it is manufacturing efficiencies, bringing productivity, all those things would help us to get to double-digit margins.
Okay. So good morning, Prashant here.
Hi, morning.
On the renewable energy front, right, building out the transmission and distribution to get the power out of these so-called renewable energy zones, is work going on pretty smoothly? Is it challenging? If you can give us some color.
Yeah, I think it's a combination of both, Prashant. I would say, India as a country has set a target of 500 gigawatt by 2030, right? So to reach that level, we need to do anywhere between 50-60 gigawatt per year. We need to add. Right now, we are adding around 20 gigawatt per year in that. So there is definitely need to catch up in the next 2-3 years to get into that 500 gigawatt of target in that. So yes, there are some challenges in between. But I would say that, this is the technology is pretty much, standardized, and you are able to, once we have the land, etc., the developers are able to complete the projects well in time. And also at the same time, the government has announced as part of the National Electricity Plan, launched, transmission plans, and that gives a huge visibility By the time your generation comes, your transmission is also under construction or under completion stage. And that's where the HVDC will play a major role in that integrating those renewables into the grid.
So does HVDC fetch you better margins than the other segments? Just trying to understand. Or is it going to get very competitive? You're saying there are 2-3 more big orders, HVDC orders, that will come up this year. But how intense is the competition? How are the margins?
No, competition is there in every sector, every segment of that. As I said, we have been investing in this, localizing the key. The margin issue is how much you localize it, how much you produce it, how much engineering it locally is that. Today, we are able to do end-to-end, localizing the HVDC technology in that. So we have a converter transformer, we have a valves, we have engineering, and all those things would help us in a better competitive. We are able to compete in this market.
Okay, all right, Mr. Venu, I need to push you a little bit more. The Leh-Ladakh order, we had briefly spoken about it in the past as well. By when should we hear the outcome of that?
So our customer has placed the order for the study spot. So we did complete our study and we have submitted our report to our customers. And based on that, we expect the customer to start floating the tenders in the next maximum in 1 to 2 quarters.
1 to 2 quarters, and the outcome would be
floating the tender. So after that, we have to tender it, and then we have to win. All those things are there.
So it could be roughly in the next 4 quarters, we should get an outcome, because in the next 2 quarters, they'll float the tender, and maybe another quarter to get the outcome, right?
Right, absolutely.
So, and that could be the other big HVDC order that we're looking at. Got it.
Yeah.
Just a quick point, on margins, exports as well as services. They are the margin drivers as well, relatively better margins. And I think exports you briefly mentioned are at around 25% of the mix. Is that correct?
Right.
And services, you were guiding that it goes to high teens. Has that happened? If you could just update us on both these two numbers, exports as well as services. What is it? Where is it headed?
Okay. On the services, we are in the high single digit, and which is the last quarter we moved it to double digit. And over a period of time, we believe that it will be in the double digit range in that. And the exports, we started when we started in the company, we were on the 15%, and today we brought it 25% is sustainable. I think going forward, we will end up around close to 30% range. So 30% exports and 12 to 15% is the services, and that would really help us to push our margins.
Okay, all right, Mr. Venu, thanks a lot for joining in. The stock price had come off a little bit from the top after seeing a one-way move in the last 12 to around 15 months or so. But you're sounding fairly optimistic about business prospects. And I think from a nation's perspective, if we're going to get a higher number of HVDC orders rather than waiting for 5 years, that'll be good news as we progress. Thanks a lot for joining in.
Thank you. Thank you for having me here.
For the time being, we'll slip in a short break. On the other side, Mr. Vimal Kejriwal of KC International is waiting for us. We'll get chatting on their recent order wins and business outlook.
Welcome back. It seems power and capital goods has become a bit of a theme for the show. You just heard from Hitachi, and that big HVDC order is the talk of town, really. Our next company in focus is KC International, also related to the T&D space in India and overseas. Now, KC yesterday announced a bunch of order wins. The total value of these orders is coming up to about 1,100 crore rupees. So what lies ahead for the second half? Is the company on track to meeting its guidance, order inflow guidance of 25,000 crores? Well, let's get chatting with Mr. Vimal Kejriwal, MD and CEO at KC International. Mr. Kejriwal, it's only been power talk, I'll tell you, for the last 1 hour on the show. Because, we had an analyst earlier on who was telling us that while we're looking at the bigger MNC players like a Hitachi or like a Siemens and these big orders, I mean, a lot of these orders obviously require, a fair amount of other ancillary, work as well. But even when you're talking data centers, right? I mean, power, if you're talking power, you need T&D infrastructure. So you tell us, how optimistic are you on the second half? I remember in our last conversation, you were saying the second half will be much better. Margins will really pick up by the fourth quarter. So what are the newer orders on the horizon, along with this latest 1,100 crore win?
So, Surbi, good morning. And I think you are almost on dot on all the items. I think I've been in this industry now for 22 years, and I don't think we have ever seen such a flow of orders coming in and also a flow of tender pipeline. Now, I was hearing Venu, my good friend, talking about what's happening on HVDC, and if 3 more HVDCs are coming, that itself will add a lot of pipeline to transmission also. It's very clear that the sector is buzzing with the thrust of the government on the renewables now from 500 gigawatt. They have said they want to make it 600 by 2032, which will add, further requirement of large transmission lines.
Right.
So, sir, okay, so let me actually take off from there. And since you mentioned HVDC, and Mr. Venu just told us that 2 more big HVDC tenders that will come up this year, the frequency of these large orders is increasing now. So, what does it mean for a company like KEC? Does the guidance that you've given, 25,000 crores of orders this year, does it factor in this heightened activity on the HVDC side?
It does factor in some orders from the HVDC sector, and I was hearing how you were filling Venu and trying to get some more information from him. But let me, I think, on transmission, since he did not answer, so let me give you one answer, is that transmission would be around 20% of the capital amount of an HVDC. That's the number we have generally been looked at. And I think that's part of it has been factored into our guidance, because we do expect that beyond the current one, at least 1 more HVDC will get ordered within this financial year. So there will be 2 HVDCs ordered in this year.
Right. So it'll be 2 total, 1 more left. Mr. Kejriwal, good morning. Just talking about the railway business for a quick bit as well. Last time you were on, you were saying that there were 7 to 8 Kavach tenders which had been put out, I think, but that was in September, October. This morning, there was, I think, 1 or 2 orders which came through as intimation to exchanges. I think CG Power got an order, Kavach order. Anything latest on that?
So as far as I understand, what has happened is the orders have been broken up into 2 parts. One is the Kavach on the locomotives, and second is on the EPC. So we had participated in the EPC. I think those have not yet been awarded, but some of the loco orders, that you remember there was a figure of 10,000 locos being fitted by Kavach. So I think a part of that has been awarded in the last couple of days or maybe yesterday. So that is what has been probably announced. But I think we expect that the others will also get announced in the next week or 10 days.
Right. And you also told us that you've consciously reduced your railway work a little bit, right? I mean, I actually rather shifted it to Kavach and signaling systems, etc. Do you expect do you expect a more pronounced change in strategy, especially after the Maharashtra elections now? Any implications thereof? Because it's a very strong mandate. And on the railway side, will things change?
I do hope so, because we have been looking at saying how do they invest more in the infrastructure. Railways have been investing right now more on the, I'll say, passenger amenities and passenger trains and all that. Now we are seeing a lot more tenders coming out. And as far as our change of strategy is happening, what we are trying to do is we are trying to, I'll say, slow down on tenders which involve working on live railway lines. So that has been the bane of the sector, where you are not getting, what we call blockages to work on railway live lines. So we are now shifting to, like the one which we announced is for electrification of a metro, which is a new metro. So there's no ROW or anything. The day the viaduct is constructed, you can go and do your line. So there's definitely a change in our strategy. But we are clearly seeing a lot more orders coming out for new railway lines and doubling, etc.
Finally, sir, what would your total exposure be to the state, to Maharashtra, across all lines of businesses? And with this kind of a mandate at the state level, are you expecting anything new? Would there be any ask? Are there any major projects that you would expect to see more action on now that the elections are behind us?
So, unfortunately, our exposure is virtually zero to the state of Maharashtra. Okay. We have a lot of private sector projects in Mumbai and all, but we have consciously been away from almost all the state businesses. Let me be very honest with you. So most of our clients are at the central level. State is very few states we operate in. Maharashtra is not one of them right now. Now with a different mandate and a much more stability, we will start looking at what we need to do. Let me tell you one more thing, that there have been very few, I'll say, T&D projects coming in at the state level in Maharashtra. But we are finishing 4 projects in Maharashtra right now. We are bringing power to Mumbai. but almost all, I think all 4 are for the private sector. So Maharashtra, I think we'll see Maharashtra will probably see a lot more transmission orders coming in now in the state, because they need to strengthen the grid, especially for the data centers and.
Okay, all right. So you've been staying away from a lot of state government work, but maybe you'll make a debut in Maharashtra now. Got that? And we'll look out for more signs and signals on it. Thank you very much for joining in, Mr. Kejriwal.
Thank you.
And look forward to another call soon. That is KC International. Let's do a quick stock check of the market before we move on to the next guest. The market's managed to bounce back into positive territory. That's good news. So there is buying on dips that's happening, about 30 points up now in the index.
Just 2 stocks. Swiggy headed to 500 rupees. Massive move, big volumes is what we're seeing. And Zomato as well, since it's making its way into sensex, the street will start factoring in that it could possibly make its way into the Nifty as well. Both those 2 big volumes is what we are seeing on that. And just one more name, NIT. The last few days, the stock has seen a big run. In this month, it's up more than 40%. You know, the stock today as well on very high volumes is at around 225 rupees.
I'm just looking at the UBS price target on Swiggy. It was actually northwards of 500. That was one call that was really noted by the market. Yeah, 515 is the UBS call. They just started coverage on the stock, and it's quickly, rushing towards that target now. Anyway, let's move on. From the power space, we're putting the spotlight now on banking. Let's first listen in to what the RBI governor had to say on the expectation of this draft circular on the ECL framework. There has been a wide consultation on this. RBI Governor Shaktikanta Das earlier this month on the sidelines of the CNBC-TV18 Global Leadership Summit said that the introduction of the ECL framework will mark the transformation of how assets get classified. Listen in.
With regard to the ECL framework, that is expected credit loss framework, even after issuing a discussion paper and receiving stakeholder comments, which we got examined by an external working group, we now propose to issue a draft circular for implementation of ECL. So the draft will be followed by issuance of a final circular. Again, we will get comments, and we are adopting this very careful approach because it, the introduction of the ECL framework marks a major transformation in the way the assets, the stressed assets or the buildup of stress, or the way the assets get classified.
Okay, so this is another major move, and that's coming. And it's a move that's coming because anyway, the accounting standards are changing. And as we move to the next standard, ECL is going to be a requirement. We have with us Mr. Sunil Mehta, Chief Executive at the Indian Banks Association. Mr. Mehta, thank you very much for joining, and great to have you, sir. Now, this discussion has been on for many months, right? The first concept on ECL was floated, I think, much earlier this year. And the whole concept deals with the fact that you need to start recognizing stress before the delinquencies happen, before the delays in payments start happening. So now at an industry body level, what's the thought? Is the Indian banking sector ready for it? And what could be the immediate sort of increase in, say, credit costs, provisioning? What will the numbers look like once this is rolled out?
So good morning, and let me first tell you that I have already demitted the office of CIBA. So I'm participating in this process in my individual capacity. That is, it's my individual views. Another thing, we have been in discussion with the RBI, and we have been in discussion within the industry about the expected credit loss and its impact on the industry. And what we understand from the entire ecosystem is that this ecosystem is gearing it for it. And this will make the provisioning requirement more realistic, because this is based on the expected credit loss, will be more realistic based on the empirical data and the time series data which the banking system has on the losses on a particular type of assets. So with cases, the thumb rule approach will go away, and the ECL approach will step in, and that will really improve the balance sheet transparency of the banking system. So anyway, the move in long run will be strengthening the banking system, and the system is gearing up to adopt it.
Sir, again, the question is, what would it mean? If we look at some of the views, ICRA put out a note on this earlier, and ICRA said that this whole transitioning to Ind AS the impact on core capital for banks could be as much as 300 to 400 basis point, including the ECL transition itself. So it's overall Ind AS plus ECL. Could it be that high? What could be the impact on capital requirements? Some more color on this.
So as regards capital requirement, if you analyze the data of the banking system, I think most of the banks already have, especially the major system already have capital adequacy 200 basis point more than what is required and prescribed under the norms. So that much cushion is already available. As regards the transition, I think Governor has also said it very clearly that this is a phase in which it will be put up on the discussion papers, views will be invited from the stakeholders, and this will be implemented in the phases. So I think the system is already geared up, banking system is already well capitalized, and this is the right time for transition to LCR system. So because ultimately banks are in a position to withhold their existing capital positions, support the ECL transition, and make the balance sheet more robust in the times to come.
Okay. So just give us a second. That's NTPC Green. And NTPC Green starts its journey on the green side of the screen. 113 to kick it off. It's a large issue, 10,000 crores. And we had the entire top management team there.
Limited on the official listing.
Okay. It's actually getting some ground now. 7% is supposed to be an absolutely flat listing. But it seems to be doing well. And we had, of course, our colleague Vivek earlier telling us that right now they're only at about 3.2, 3.3 gigawatts of capacity. Supposed to go up to 60 gigawatts of installed renewable capacity over the next six odd years, 6-7 years.
It brings back memories to me, Surabhi. NTPC itself, NTPC Limited, listed in 2004.
You remember it?
Remember it? I applied in the IPO.
Okay. Then you remember it for sure, yeah.
So I think 2004, and that one came to the market at about 70 rupees. I'm just looking at the price. I don't remember the price. Put it about 70 rupees or so. And of course, that's had a fantastic journey. And now the second one, NTPC Green. Coming in back into 2024, 6.5% higher. So it's a pretty good one as far as. And I think it's now trading at 5 times F525 book value, approximately 4.5-5 times FY25 book value, which isn't cheap. But it's a marquee name, largest player, a lot of government support. So it's got a lot of tailwinds going for it as well. So that's the latest one. And I think that should be the last big IPO for the year, or are there any other ones? I'm not sure.
Now that Swiggy is done, NTPC is done.
At least for the year, maybe.
I think maybe we get into a bit of the December mood from here onwards. Had some marquee names come to the market this year. Hyundai, it's been really the year of IPOs as well. Anyway, getting back to that conversation on banking with Mr. Mehta. So, Mr. Mehta, you're saying that, ECL, this is a good time. And given where we are in the credit cycle, perhaps a good time to make this transition. Just to complete this point, and then we'll ask you about the new LCR rules as well. From an operational standpoint, what changes for a bank once you move to ECL? Because you don't wait for a delay in payment. You have to start recognizing that stress earlier. So, what changes operationally on the ground, if at all?
So basically, the historical data which banks have about each segment of their credit book, they have a historical data that what is the expected credit loss in each case, and depending upon the various parameters for every individual asset, the expected credit loss can be identified in advance. And because multiplication probability factor is already available with the banking system, and that will help them to provide it for the way RBI prescribes for provisioning norms even for standard assets. Same way, the provisioning norm for the existing standard assets who are not fallen into NPA, the bankers will have to start making slight provisions, keeping on their historical data in mind. That will help them in strengthening their balance sheet in times to come. And this transition will require a good set of data with the banking system till they don't have their own set of banks' data. they will have to rely on the industry averages which are available, and that will convert into the probable capital or the provisioning requirement for individual segment of the credit. This will facilitate two more things. One thing, because the provisioning will be on the expected credit loss, bankers will definitely become extra quality conscious, and quality consciousness will definitely help them in building a better loan book.
Okay, all right. Running out of time, sir. So we'll leave it on that note for today. Thank you very much for joining in and giving us some perspective on the rollout of the expected credit loss framework, which is going to take place pretty soon. Well, with that, let's actually go back to the market. We've got a very, very flat screen again. We had the little bit of a 20-30 point gain, but that's now fizzled away again. Back to the flat line. Mitesh is with us. Mitesh, slightly choppy, no clear directional call. It's all about individual stocks today. What trades now?
So be two things. One, I think, it's been choppy. Yesterday was also a consolidative day. But if you look at the, intraday lows for Monday, Tuesday, and Wednesday. Monday was, I think, 24,135. Then yesterday, Tuesday was 24,125. Today is 24,145. So broadly, this 24,150, 120 zone is holding on. Maybe, if this consolidation, if it can break, if today by late afternoon today or tomorrow morning, then I think on the upside, the Nifty could retest 24,350, and beyond that, we could see further upside. So to me, while it's been slightly choppy, I think the overall bias in the short term, looking at the indicators on the hourly and 2 hourly charts, still is on the positive side. So I would, suggest that traders can build longs around 24,150 zones with a 70-80 point kind of a stop for a target of 24,350.
Okay, all right. Your any new ideas, Mitesh?
Yes, Prashant, I have a buy on Power Grid with a stop at about 335 for targets of 350. And IRCTC is also a buy with a stop at about 810 for targets of 855.
Okay, all right, got it. Thank you very much for joining us, Mitesh. Appreciate it. We're going to take a quick commercial break here. We'll come back. Commodities in focus. Manisha, who joins us on the other side.
Welcome back. So equities cannot make up their mind. Let's figure out what's happening in commodities. We have Manisha in the studio now. Earlier, we were talking about the fall in oil prices with this ceasefire agreement. Manisha, is it still oil, or are you looking at something else now?
Well, I'm looking at the crude oil prices because, after that 5% gain in the previous week, you thought that perhaps the crude prices will see some stability right now. But no, that is not the case. Monday was 3% down. Yesterday was another percentage point of a decline. And today as well, we're trading very flat into the markets. So we are trading on the lower side of the range when it comes to the crude oil prices. 68 just about holding for WTI, and from a high of almost $75.50 for the Brent prices, we are holding around 72 onto that one as well. Well, the biggest view comes in from Israel and Hezbollah ceasefire. That accord begins from today. There have been statements from various levels, and Biden also has done a press conference on this one. So we have seen that impact come in for the prices there. Apart from that, the second thing really is about the OPEC, which may further delay planned output hike due from 1st of Jan. If they do that, this is going to be a third straight time that OPEC and allies cannot make up their mind, and they are postponing hike in output. So that also continues to weigh onto the markets. Even with what they're doing right now, if you look at the world market, it has 8 million barrels per day of a spare capacity. I mean, that's as bearish as it gets for the prices going forward. Now, for 2025, and this report is coming from Bank of America, it says that there is no case really for the crude oil prices going higher because the non-OPEC supply is expected to rise by 1.4 million barrels per day in the next year. They also expect that the OPEC and allies will perhaps reinstate 2.2 million barrels. That would come in from that. And then that would mean a surplus of 800,000 barrels per day in 2025. Add to that the fact that the new U.S. president, when he takes chair in the month of January in 2025, could be coming out with various views and steps when it comes to crude oil. One, the export permits for the new LNG projects is something that could come in. Apart from that, increasing oil drilling off U.S. coast and on federal lands is another thing that could be allowed. And the third thing is new funding for replenishing the SPR. These three things is what the markets believe that Trump will do in the first week of January itself as he takes over. And this is also going to be bearish for prices. In the meanwhile, while we are looking at 25% tariff from U.S. on Mexico and Canada, for Canada, it would mean a staggering number breaker there, because 4 million barrels per day of an import from Canada of crude is what US does. How is that going to be impacted is something that the street will look at. The second thing is the US inventories, which was also declined by 5 million barrels per day in the previous week. So these couple of factors are kind of supporting the prices, but not as much. So when it comes to 2025, the Bank of America predicts that for next year, you could be looking at Brent averaging at 65 and WTI at 61. So much lower than what we've seen in the prices in this year. So further bearishness could continue.
Okay, well, we'll not complain if we see 60 to 65 on oil prices. Manisha, thank you so much for that. Well, let's quickly take a break. We'll come back with our special segment, Indianomics, on the other side. Lata will be catching up with Upasna Chatra, Chief India Economist at Morgan Stanley, to discuss the Indian economy outlook for 2025.